The potential of earning a huge sum of money has drawn the attention of investors to invest in stock markets. However, doing so is not that quite easy. It requires not only a lot of patience and discipline, but also a great deal of research and a sound understanding of the market. Now, if you're ready to make a fortune by investing in the stock market, then you really need to see this. While it's true that there is no such thing as a 100% guaranteed success formula due to the volatility of the market, there are, however, some golden rules which, if you follow prudently, may increase your chances of getting a good return. If you want to know what they are, then stick with us until the end. Welcome to Thrivetastic. If you're new here, why not hit that subscribe button and join our community? And as always guys, give this video a thumbs up for that YouTube algorithm. Golden rule number 1. Never lose money. According to the billionaire Warren Buffett, the rules of investing are rule number 1 is to never lose money. Rule number 2 is to never forget rule number 1. Just think about it. Why would you risk losing money when the goal of investing is to make it grow? But don't get me wrong, it's impossible to always avoid losing money, especially in the stock market. What Mr. Buffett truly means is that you should not be blindsided by the potential returns on your investment, and you must also assess the risks. Essentially, if the prospective returns do not outweigh the risks, your investment may not be worth it. This may explain why many investors today shun long-term bonds like the plague. Golden rule number 2. Start small and think big. As cliche as it may sound, big things start from small beginnings. So let's get to the point. In case you're interested, the trick to stock investing is to start small. You must initially test the waters. So start by investing a tiny portion of your savings or monthly income. Aside from that, it is great if you take the time to learn about the companies in which you wish to invest. Again, start small until you're confident identifying the greatest companies to invest in. Finally, you'll design an amazing trading strategy that will secure your success in the stock market. Golden rule number 3. Think like an owner. Another crucial thing to remember while investing in the stock market is to think your equities as businesses. Many individuals regard stock as a type of gamble, forgetting the real businesses behind them. At the end of the day, stocks give you partial ownership of a specific company. Therefore, you should start thinking about yourself as a part owner of that company you're investing in. When the business performs well, this is how you make money, and vice versa. So what exactly is thinking like an owner? Well, you must evaluate fundamentals and create an opinion about how the firm will perform in the future. Don't forget to look for companies with an outstanding management team, a strong focus on shareholder interest, and a strong financial and competitive position. Golden rule number 4. Invest only in businesses that you understand. As we have mentioned in golden rule number 3, you're not investing in a stock but rather the business behind it. So what does this imply? Well, you need to understand how a company generates profits, its strengths, and even the risk it faces before investing in it. If you don't understand the business, you should do one thing: let go. According to some sources, Mr. Warren Buffett had an opportunity to invest in Google before they issued an IPO, but he passed it up. He reasoned that he couldn't see how the search engine could make money. And did this decision cost him money? Absolutely. It could have made a lot of money. After all, Alphabet Incorporated, Google's parent company, is now worth $1.474 trillion. But all the same, we shouldn't forget that this decision actually spared him from far greater losses over the years. So starting today, you should apply this to all of your investments. For example, if you have no idea how Tesla works, you should avoid investing in it. Golden rule number 5. Don't try to time the market. Any financial professional will tell you that while you may have a good understanding of a stock's valuation and price level, you should always refrain from trying to time when the market values it appropriately. And here's why you can't. It's extremely difficult to anticipate when a stock will reach its peak or bottom. In fact, despite checking numerous market cycles, no one has been able to time the market. Golden rule number 6. Be disciplined. Successful stock investment necessitates a high level of discipline. Let me explain more. After developing an investment strategy and identifying a stock worth purchasing, stick to them. What do you do after deciding on a target price and a stop loss? That's right, stick to it. And stick to your strategy for how much to invest and when to invest it. There's no denying that with money on the line, your emotions will definitely rush when the market becomes unpredictable. And when that happens, sticking to your plans might be difficult, but you want to stick to the plan you formed with a calm mind. If the heat is turned up, get out of the kitchen. Don't sweat it. Golden rule number 7. Always invest only excess cash. Never put all of your money in the stock market, and here's why. The market is always fluctuating, which means you're always at a risk of losing money. That is why you should only invest the money you are prepared to lose, rather than the money you need for daily survival. The significance of budgeting and planning your investment cannot be overstated. Golden rule number 8. Keep tabs on trends. The last thing you want to do is invest in the stock market and then just sit back and watch it grow. You must monitor your investments regularly because it's the only way to be aware of changes in the global market that could jeopardize your profits. But what if you can't do it all alone? Well, you can always hire an expert and give them instructions on how to manage your portfolio. Golden rule number 9. Diversify your portfolio. As an investor would say, don't put all your eggs in one basket. This is a very popular saying among investors, and they use it for a good reason. To reduce the danger of losing your money, diversify your portfolio. But how precisely do you do it? It's easy. Invest in both assets and instruments. You could, for example, buy an index fund like the SP 500 and add a bond to your portfolio. Or you may invest in a real estate fund. Golden rule number 10. Buy and go long. That is the best approach to investing in the stock market. And it essentially involves purchasing some shares and holding them until you get your desired profit. Let's delve a little further here. So, how long should you keep your shares if you want to make money investing? It all comes down to your TP, which is effectively your target period or profit. Essentially, if your target profit is 10%, close your trade when you achieve that profit. Similarly, if your target period is 1 month and you see some earnings, close your position and look for another wonderful opportunity. Golden rule number 11. Buy when everyone is fearful. As Warren Buffett says, be fearful when others are greedy. Be greedy when others are fearful. This means being prepared to invest in a down market and to get out in a soaring market. When the market falls, most investors sell or stop paying attention to it. But some don't do so since that's when the bargains are abundant. However, the stock market is literally the only market when things are on sale but people are too scared to purchase. Fortunately, if you're a 401k investor, you don't have to do anything further once you set up your account to continue investing. It's a great way to keep your emotions out of the equation. Golden rule number 12. Be objective. When investing in the stock market, it's all too simple to imagine the best case scenario. When you set your sights on the best, though your decisions must be based on an objective evaluation of the investment opportunities offered to you. Essentially, all of your decisions should be governed by a reasonable expectations of returns rather than the idealistic results you're hoping for. Golden rule number 13. Lock in profit. Another golden rule of investing is to lock in your profits from time to time. This allows you to receive a consistent income. We've stated it before, but the stock market is always moving up and down. So having some money to trade actively and profit from time to time makes sense. Don't dismiss the possibility of shorting. After all, you can also profit from market declines. Golden rule number 14. Pursue profits, not losses. If you have a trade that may be more profitable, leave it alone. Similarly, if a trade is going poorly, why wait for it to get worse? Loss recovery is more difficult than you might think. Golden rule number 15. Learn from your mistakes. Our last golden rule of stock investing is to constantly learn from your mistakes. What does this imply? Basically, keep a record of your triumphs and losses because it will assist you to avoid mistakes in the future. That's all for our 15 secret golden rules of stock market investing. But before we wrap up today's video, let me ask you guys, what is the most important rule you've learned about stock investing? We'd love to hear from you, so leave your thoughts in the comment section below. As a bonus for sticking with us, we will share with you another rule of investing. stay grounded. That's right. The importance of keeping your feet underground when it comes to stock investing cannot be underestimated. You may have some good streaks, but don't let them get to your head. Thank you for watching this Thrivetastic video. So if you found it valuable, consider subscribing to our channel and joining our awesome community. And if you're still hungry for more, we handpicked this awesome Thrivetastic video for you to watch next.